good buying pressure coming back as we headed towards 40,000. Could even be a bull market as we stay above 3,500. Bullish candles about 2 days back, same thing, right? The market sold off. So with the Federal Reserve finally cutting rates after almost 2 years, we are starting to see strength in the markets, and even the Singapore market is pushed to a new recent high. So where are we right now as we head into the end of 2024? As the rate cuts finally come, could it trigger a bull market? Hey guys, Joey here, top tier MyZero trader in Philip Securities, and in this video I'll be diving into the key market indices, right? We look at the Dow Jones, the S&P 500 index, even the Nasdaq, and finally the Straits Times index, the STI. Where are we for each of the different markets? What are some of the key levels? Where could there be new targets whereby we may actually head to? Watch this video all the way to the end if you want to know where we are for each of the markets. Let's go. Dow Jones trading at about 41,096. So you can see that we have seen some very good support coming out around that 40,000. In fact, just about 2 days back, we saw some really good buying pressure coming back as we headed towards 40,000. Quite a bullish candle as buyers came out and pushed the market even higher, and it closed somewhere at a high. So 40,000 would be a very key psychological support level right now. And as long as we stay above that 40,000, I think the market looks pretty bullish. The longer term uptrend is intact. Even in the short term, it looks pretty good as well. And you can see that for 40,000, it was previously a very key resistance level since March, April, May. We've been trading below. We attempted to break it, came back down in August when the market sold off. But right now, over the past 2 to 3 weeks, we have been holding quite well above 40,000. So the range would be like 40,000 all the way to around 41,500. So about 1 week back, 2 weeks back, we saw some selling happening right over here around 41,500, and since July, about 1-2 months, we've been trading below this level. So I think selling wise, resistance about 41,500 to 41,600. Potentially that's where some selling can come back again, and if we were to break that level, I think looks good. That's where the short-term trend will turn up even more. We break this level, upside targets can be revised maybe from here based on this range, right? Maybe all the way up to 43 to maybe even 44,000. So looks pretty bullish. We are looking for the break of that 41,600. Okay, next one, the S&P 500 index, a very popular index that tracks the top 500 companies in the US, and it's trading at about 5,595. So you can see that over the past few days, we started to see strength coming back as well as we headed towards this very key support level around the 5,400, right? That was where we spotted some bullish candles about 2 days back. Same thing, right? The market sold off, and then buyers came back and pushed the market all the way up. So quite a bullish candle for the entire market. Same thing for the Dow Jones, but in this case, the support would be about 5,004. And you can see that it also coincides with where the red line, which is the 100 days moving average line is. You can see, right, every time it nears it, rebounds, and now we are very near this 100 days moving average line as well, which is pointing up. So the longer term trend has been up since last year. Right now it's still up. Of course, in the short term, we did see a bit of weakness as we headed towards that resistance at about 5,670. I think that would be where selling might happen again. Since July, for about 2 months, we've headed there, came back down. So the range is quite clearly, for S&P 500 index for about 5,400 all the way to about 5,670, right? So that is kind of like the range. Looks pretty good, looks bullish still. The uptrend looks intact, and I think there could be more upside if this 5,670 or maybe the 5,700 resistance gives way. Upside targets can be raised maybe all the way to even that psychological 6,000 level. That could be the next upside. So yeah, this is the S&P 500 index. You can also put it in your watch list if you are trading kind of like the index. You can trade what we call the ETF, the SPY, right? That tracks the S&P 500 index. The next one, Nasdaq Composite Index, right? The index that tracks some of the top technology companies in the US, right? And by the way, guys, if you want to find out a little bit more in terms of the entire strategy, right? How do we know if a stock is good or not? When do we want to get in and get out, right? Attend more of those free webinars that we're still running. The link is right below the video. Click on it, attend more of this 2 hours webinar whereby I'll share with you guys my one good trend strategy, right? So I don't have time to cover everything here today. It's just giving you a quick analysis of where are we right now for each of the markets, where we could potentially head to before some selling, and then if you were to break that level, upside targets can be even revised higher, right? So attend one of those webinars. The link is right below. So let's talk about Nasdaq composite, you can see right now 17,569. So you can see that we have kind of like broke yesterday. I mean, we kind of like broke above or close above that 17,500 level is 17,569, so above 17,500, and this level is key because you can see that 17,500 was originally the support level. You can see we broke down, went all the way down, retested that 16,000, and in fact over the past 1 to 2 months we're trying to get back above that 17,500 to maybe even that 18,000. We couldn't happen, came back down, and right now we are seeing an attempt to go above 17,500. So if even the 18,000, so some slight resistance here, you can see that was where we saw selling as well, just about 3 weeks back, around 18,000. So I think if we can stay above 17,500, could potentially, we may attempt to break that 18,000 and we hit all the way towards the previous high that you've seen, and that would be around that 18,700 level. That is key. That is kind of like the recent high we've seen for the Nasdaq. If you're to break that level, I think potentially upside targets can be rise all the way to 19, maybe even that 20,000. So that could be the next upside target. So the uptrend looks pretty intact in the longer term. I think so far, in the longer term since last year, we have seen prices heading towards the longer term moving averages. Like you see right over here, the red and blue line rebounded, the red line rebounded. Look at this, this was in August, sell down, we headed towards the 200 days moving average, rebounded. Right now, we are very near the 100 days and 200 days moving average. The longer term trend is still up around there. And you can see it's now attempting to push away from it as well, like what we have seen previously in May, right? So it looks pretty good. I think if you can stay above 17,500, potentially attempt to break 18,000, and that's where more upside can happen as we attempt to retest the previous high. Okay, let's move on to the Singapore market, and that will be the Straits Times Index, the STI. You can see right now we are trading about 3,562, and that is a good thing because you can see that we have broken a very key level that I talked about last month as well. You can see that that was a very key resistance, the 3,500 resistance. We have been trading below, I would say, since 2020, or since 2019. In fact, more than 4 to 5 years we've been trading below this level, and over the past few days managed to break that 3,500. So that's a sign of strength. It shows that buyers are prepared to push it higher. It could potentially trigger even more upside, or it could trigger what we call the start of a firmer uptrend, as long as we stay above that 3,500 now. So this resistance would now be a support. Let me just turn this red line to green in color, and you can see that longer term trend for the STI, the Straits Times Index, has been up, I would say, since May. All right, we've turned into what we call a bit of a sideways trend. We kind of like broke that 3,250 to 3,300. The trend turned up in the longer term. Of course, in the short term, we went up, sold down in August last month when the market sold off due to recession fears. But you can see, right, the 20 days moving average, this green line, has started to U-turn back up over the past 2 weeks, and right now obviously it is still up as we hold above 3,500. So the short-term trend looks pretty good as well. So where can we potentially hit to? Well, you can see that I've drawn this resistance right over here around the 3,640. Let's go ahead to the back and see where we were. So that was pretty much where we were, right over here. That was around 2018. You can see we kind of like headed to here, about 3650, 3650, and we kind of like push away from that level. So that's where I've drawn this resistance level back to 2018, about 6 years back. Let me go ahead to forward to where we are right now, and that is potentially where we can head to before some selling can come back again. So all the way to around 3,006 to 3650, potentially that's where some profit taking can come back again. So even though some selling can come back near 3650, but overall, as I mentioned, I think it still looks pretty bullish for the STI. It could even be a bull market as we stay above 3,500. Even the banks are seeing quite a bit of strength in the banks like DBS, OCBC, UOB leading the index upwards. I'll do a video for the banks in another video, but right now I think the market looks pretty bullish, and of course with these rate cuts coming in finally, all right, that's where it could trigger a lot of positive sentiment in the market finally after 2 years. And not just the banks, right, we are seeing strength in many of the companies as well in the US and the Singapore market. So with rate cuts finally coming out, we are also seeing strength in the Singapore REITs, all right, the real estate investment trust. In fact, in my previous YouTube video, I did cover like 3 Singapore REITs that you can put in your watch as well. Check out my YouTube channel, right, there will be a link for another video somewhere. Click on it, check out what are the 3 Singapore REITs as well that can potentially benefit from the rate cuts finally coming. So there we have it, guys. These are the analysis of the markets, right? The Dow Jones, the S&P 500 index, Nasdaq, and even Singapore's STI. So I hope you have a better picture of where we are right now for each of the different markets, some of the key levels whereby you want to take note of where some selling can come back again. But if we were to break that resistance, you want to be prepared for more upside, right? So I hope that helps as well. All right, and yeah, overall I mentioned it looks pretty bullish, right? As long as those support levels I talk about is holding, the market looks pretty bullish. You want to know which stocks to focus on and when to get in on them. And if you want to know and find out a little bit more on the entire One Good Trend strategy, check out the links right below. Attend one of those free webinars whereby I share with you guys a little bit more and how we have a system to help us as well to guide us on entry and exit. Joey here. Thank you so much for watching. I'll see you in the next video. Take care.